Wheels Up is one of the biggest names in the private aviation business. Its job is to give people access to business aircraft through what is essentially a membership program, and it's been doing that now for about a decade. But the company's been in the news for all the wrong reasons, because it seems that the wheels may be coming off the finances at Wheels Up. We caught up with Mark Huber, who's a reporter with AIN, and he's been following this story very, very closely indeed. And we'll be finding out from him what's actually happening. Hello, Mark. So first of all, can you just quickly remind us what Wheels Up is? You know, what sort of service it's providing and where it stands in the industry?
Yeah, Wheels Up sort of fits into the fractional space only without equity. So it's basically a membership organization where you pay a membership fee to join, you pay annual dues, and then you pay an hourly occupied fee for the aircraft on top of everything else. So it's a little more flexible than NetJets or FlexJets in the sense you don't need to come up with a big nut to get into the game.
Now, of course, one thing we need to acknowledge about Wheels Up is it is a public company. It is on the New York Stock Exchange. It got to that place by one of these classic mergers with a so-called special purpose acquisition company.
Right.
Let's just go back before 2021 when it did that, when it was a private company. What helped Wheels Up to grow? You know, how did it sort of really get established in the market and become such a notable company?
Wheels Up was founded by Kenny Dichter, who was the founder of Marquis Jet Cards, which was later sold to NetJets, which was sort of the pioneer of buying block hours on a card and then using it with a provider, in this case NetJets, which used their excess capacity to accommodate Marquis Jet Card customers. So he made a name for himself that way, and he was able to go into the capital markets with private investment banks, raise a certain amount of money and buy a bunch of King Airs to start this service on sort of a regional basis, and then quickly expanded national with the addition of other aircraft types, Cessna Citation XLs, Cessna Citation 10s, and some larger aircraft.
So in broad terms, what do you think has actually gone wrong at Wheels Up? I mean, here we are, there's talk of, possibly having to go bankrupt or get bankruptcy protection. How have the wheels started to come off this operation?
From the founder, Kenny Dichter. Mr. Dichter didn't have a whole lot of experience in this space as far as operations, running a company of this nature. His main focus was as an entrepreneur and in sales. As they say in commercial real estate, there are openers and there are operators. Mr. Dichter was an opener. And he needed a strong operations team to make this work. And it's obvious the strategy wasn't there, and maybe the personnel weren't there either.
But, I mean, he started it back in 2013. And correct me if I'm wrong, it seemed like it was going okay, at least to start with. What do you think was sort of the breaking point? Did they maybe overextend themselves? I mean, I saw it reported that since COVID, they'd increased their customer or membership base by about 25%. And it seems odd that you could get more customers but still lose money.
Yeah, it was 31%.
31, right.
This is a classic case of executive compensation being tied to the wrong metrics. Mr. Dichter's compensation was tied to both growth in membership and growth in revenues, and not necessarily profitability. So he had an individual incentive to grow the company as big as it could be grown without necessarily being profitable. There are other things too. There was an enormous amount of churn in the C-suite in the company, a lot of people in and out, things of that nature. Compensation for Mr. Dichter was sort of out of line with the size of the company. His compensation was sort of outsized because of these big bonuses he was getting from growing the company and growing the membership. To give you an example, Mr. Dichter's compensation in 2021, a year Wheels Up lost $200 million, was greater than that of Doug Parker, who was then CEO of American Airlines. It was larger than Gary Kelly, who was CEO of Southwest Airlines. And I could go down the list. It was outsized for the size of the company. The incentives were wrong, the personnel was wrong, the strategy was wrong. I mean, just about everything wrong that could be done was done, starting with how the company was started by buying aircraft instead of being asset light, which is even what NetJets does. NetJets, their customers buy the aircraft. They don't buy the aircraft.
Yeah, good point. Very fundamental difference. And in some respects is part of the problem that Wheels Up has essentially sort of overpromised the service it can deliver to the customers, and that, in recent years, it just hasn't been able to deliver on that promise without perhaps having to pay more in order to be able to deliver it. And that's why it can't achieve profitability.
Well, the backbone of Wheels Up was a King Air fleet. Okay, you're repositioning King Airs. That takes a long time. They're a relatively slower aircraft at 280, 300 knots compared to a jet. So your repositioning costs are very high. They tried to be a nationwide company where their concentration of customers is on the East Coast and in the desert Southwest in the Los Angeles area. So, you can do that. You can grow a company to national like that, but you better have deep pockets. For example, NetJets, which is owned by Berkshire Hathaway, that company has annual revenues of over $300 billion a year. You're not going to, eat market share large enough where you can beat out NetJets backed by Berkshire Hathaway. It's just not going to happen.
What do we know, if anything, about the amount of debt that Wheels Up has? You mentioned that, they have a lot of skin in the game. They've been actually buying the aircraft rather than having their customers buy it like NetJets does. So do they owe a lot of money to manufacturers for aircraft that they've got on order?
No, not necessarily. I mean, they're not buying aircraft right now, for one thing. They figured out that this is not a winning proposition. They did mortgage their existing fleet back in October, and that raised some eyebrows because it raised $259 million. But at the same time, the coupon rate on that debt is 12%, which is very, very high, which means, the people loaned them the money thought they were not necessarily a good risk. The other big liability they have, they've sold block hours to customers that are worth about $1 billion. And those customers are going to fly those hours off. Okay. Yeah. Wheels Up is losing about $60 million a month right now at the current burn rate. They've got $380 some million left in cash. Okay. Optimum scenario, they're out of money in 3.5 months. Mm-hmm. They lost $555 million last year alone. Now, Mr. Dichter is no longer with he's with the company as a member of the board, but he's no longer CEO. And Todd Smith, chief financial officer, is acting CEO. He comes from GE. Very smart guy, very impressive. I sat in on the conference calls with him, and I actually interviewed him personally this week. He's got a good strategy to turn the company around by breaking it essentially into two service areas, lowering prices a little bit, improving customer service, things of that nature. The question is, can he do it quick enough to turn it around without some kind of capital infusion? It's going to be a very hard climb.
I mean, is bankruptcy a real possibility here, or do you think it could be headed off? Definitely.
No question. I mean, they full throat denied that bankruptcy was part of their plan. A couple days ago, right after a report came out on CNBC that said that the company was talking to bankruptcy and restructuring firms. I don't think CNBC got the story wrong.
Good point. Now, talking of customers there, I mean, this is clearly a very, very serious situation that could potentially result in the company collapsing. Regardless of whether that happens or not, what do you think all of this means for the exposure of the rest of the industry? I mean, in one scenario, Wheels Up goes bankrupt. What then happens to all these aircraft it owns? What happens to the market for pre-owned aircraft if suddenly a load of these aircraft are sort of dumped into the pool there? Let's start with that issue. Could there be a sort of fallout from this?
Oh, definitely. And you got to remember, Wheels Up is one of the better finance companies in this space compared to companies that are smaller than Wheels Up. And their burn rate is $60 million a month. A lot of these other companies are private. I really am not privy to their financials. But if I were buying block hours right now, if I were a consumer, I'd be very concerned.
Yeah, yeah.
And it's definitely going to put downward pressure on the price of certain models of used aircraft, like jets and turboprops for the most part.
I mean, I suppose Wheels Up's competitors are on the sidelines looking at this situation with perhaps a mixture of concern, but also a bit of, let's face it, schadenfreude. They look at this rival that they perhaps somewhat resent and think, well, they're getting found out at last. I mean, do you think the competitors will react in some way, perhaps trying to mop up its customers?
Yeah, I think maybe, but Wheels Up customers tend to be aspirational. The newly wealthy, the middle wealthy, for the most part, they're not billionaires. Billionaires own their own airplanes, and the super rich kind of go with higher end outfits. So it's a question of maybe the number of people in the space maybe was overestimated.
Could it result in a sort of breach of confidence in the wider private aviation service sector? And what I mean by that is this, that, if one company fails, you know how public perception is. After a while, they forget the name of the company that failed, and they just say, oh, that company that was selling hours in jets, they failed, so I'm not going to go down that road at all. That whole thing seems kind of flaky. I mean, might there be some sort of wider reputational damage, I suppose is what I mean.
No, I mean, people who need private lift. They're going to get it from somewhere. I mean, it's like, say you buy a car that's a lemon, okay? You're not going to walk the rest of your life. You're going to go get another car. It's kind of the same way.
Yeah.
Once you get used to flying privately, you really don't want to go back to the airlines.
And I think in some of your recent reporting, you've mentioned that there are some lawsuits brewing. I mean, do you think there are going to be people suing the company for breaches of promise, that sort of thing, potentially?
Under bankruptcy law, Wheels Up customers have very few options if the company goes that way. They're considered by the courts junior creditors. Their claims would be limited to about $3,300 a piece under the law. And a lot of these people have bought block hours that are worth $200,000, $400,000. I mean, they're going to be out a lot of money. Now, what they could do, Wheels Up has a relationship with Delta Airlines and Delta's mile programs and things of that nature. And Wheels Up customers are allowed to buy first-class tickets using their block hour dollars on Delta for a 20% discount. If I were Delta, I'd be real nervous that a lot of these people are going to run to Delta and buy a bunch of first-class tickets. I'd be very concerned if I were Delta. And that may give Delta an incentive to, if not infuse the company, put it into a structured bankruptcy and take it out and run it themselves.
So that would be one way that these Wheels Up customers could, so to speak, cash in their chips because they have a way of liquidating their...
Yeah, or even stay whole if whoever takes the company after bankruptcy decides to honor, at least in part, some of those contracts.
Well, thank you, Mark. You've helped make that a lot clearer for us. Of course, this is still a story in progress. We don't know exactly how it's going to play out. So we may want to come back to you and check in and see what else gives on this.
Wheels Up stock opened at 25 cents this morning. It's down about 99% from 2021. So it's going to move fast.
Yeah, of course.